Next half hour, we will have an expo talk about Biotech Hong Kong IPO, the common legal issues from Yiming Liu, the partner of Cooley. Yiming has advised on numerous high-profile life science IPOs in recent years. In addition, on behalf of the clients in the US, Europe, and China, Yiming has successfully led the negotiation and documentation of a wide range of cross-border transactions, including the mergers and acquisitions, the private financial, joint ventures, and partnering and licensing arrangements. Let's welcome Yiming.
Thank you, Ziyan. Thank you, everyone, for joining this session of this great event. I am very honored to be part of the panel, and I'd like to share some of my experience, and especially in the Biotech Hong Kong listings, which is, I understand, a hot topic or area of interest among entrepreneurs and investors these days. Let me pull up my screen. Great. Great. So thanks again to BayHelix and MSQ Ventures for the kind invitation. I'm very honored to be part of this event. A few quick words about our firm. I'm a partner at Cooley LLP, which is a global law firm. We have over 1,200 lawyers across 3 continents, located in 17 offices. We're serving clients in more than 90 countries today. We are a market leader in healthcare and life sciences legal services, representing some of the most prominent biotech industry players, both in the US and in China, the rest of the world. We represent more than half of the companies on the NASDAQ Biotech Index, which showcases our concentration and emphasis in this particular industry among all sectors. We are a firm built to serve the various needs of a biotech company, starting from the incorporation of a company through various rounds of financings to IPOs in the US or Hong Kong, and all the way to various strategic transactions, including mergers and acquisitions, licensing, partnering transactions, and of course, also litigations, IP prosecutions as well. This slide shows some of our select biotech clients across our platform. Some of these might be familiar to you. They are primarily based in the US. I'll talk a little bit about our China practice in a bit. We have been in Asia for over 30 years, representing fund clients and also companies in Asia. We established our first office exactly 10 years ago in Shanghai, where I am based. We established in the next 10 years multiple offices in Asia, consecutively in Beijing, Hong Kong, and Singapore. Today, we represent some of Asia's most innovative and dynamic life sciences companies, as well as tech companies. As I mentioned, we provide life cycle representation for biotech life sciences companies from the early days of a company's life cycle all the way to their listings and various strategic transactions. This is a list of representative services we provide to clients in Asia and Greater China. Some of these might be relevant to the audience today, and we'll be very happy to accept inquiries and seek collaborations going forward. And this slide in particular is a list of clients we represent today who are based in Asia or Greater China. And I'm very proud to see some of my clients actually in the panel or in the audience today.
Sorry, Yiming, just to interrupt you for a moment.
Sure.
I think for some issue, we can't see your screen, your sharing screen.
Oh, you can't, sorry. Oh, let me.
Yeah. Yes, it looks great now.
Oh, okay.
Yep. Yeah, thank you.
Sorry about that. No worries, thank you. Okay, so I was introducing some of the clients we represent in Asia and Greater China region today, and I'm very proud to have seen some of my clients actually sitting in the panel in the audience. I'm very glad and proud to be part of this session with them. A few words about myself. I have a biology background. I went to undergrad at Fudan University studying biology and also studied at the graduate school at the University of Michigan, continuing to major in molecular and cellular developmental biology before switching my career to law. After receiving my JD degree from Columbia University, I practiced in New York for a few years before moving back to Shanghai to continue to practice in corporate legal area. My focus is on life science and biotech companies, strategic transactions, both in terms of listings in Hong Kong and the US, and also various mergers and acquisitions, private financings, and partnering transactions. In terms of IPOs, in the recent 2 or 3 years alone, I have completed a number of high-profile IPOs in the Hong Kong and the US capital markets, representing some well-known biotech companies that probably the audience and the panelists will be aware of, including most recently last Friday, my client ASIMChem Kailai Yiyao completed its Hong Kong IPO. Earlier this year, I also completed the IPOs of KeyMed, Brii Biosciences, and in the last couple of years, we also represented Remagen, Akeso, Innovent Biologics, Jaco Bio, Seastone, so on and so forth. The US IPO market is relatively choppy these days, but we also are working on numerous China-based or at least China-US dual-based biotech companies' attempts in seeking a listing in the US, primarily on NASDAQ. As you can see, I also work on numerous private equity transactions over the years, especially in the life science and biotech field. Mergers and acquisitions as well. We see a landscape shift in the recent years, given the geopolitical tension between the US and China/Europe. More and more companies are being cautious about doing acquisitions into the US or Europe. But given the need of strategic organic or acquisitional growth of many clients, we still look into investment opportunities, or in some cases, smaller scale acquisitions for our clients who are interested to expand their footprint outside of China. We also work on numerous licensing and partnering transactions over the years. Cooley is known as one of the go-to firms for these types of transactions, and myself included. We would be very happy to provide all types of services available to our clients throughout their life cycle. Okay, going to the topic of today, I'll try to give the audience a very quick overview of biotech listings in Hong Kong, and hopefully after this presentation, you have a very general sense of what a listing process would entail and what are some of the common legal issues. Among many reasons for seeking a listing in Hong Kong, these are some of the primary advantages that we often hear from potential listing applicants and bankers and investors. In particular, in today's political situation, I think Hong Kong has emerged as a relatively safe and preferred listing venue for companies with a significant China presence. I think this is probably going to continue into the next few years, and a lot of the US listed companies based outside of China are also seeking to conduct secondary listings in Hong Kong just to hedge the potential risks that arise from the continued geopolitical tension. Some of these are very, over a high level overview of a Hong Kong listing information you probably find from other public sources. Typically, we call a Hong Kong IPO a Hong Kong IPO because it is eventually a listing of a company's stock on the stock exchange in Hong Kong. But in reality, the primary offering of the stock or the securities will be outside of Hong Kong. And most of the times, the investors buying into the IPO would be based in the US. So in reality, it's a global offering of the primary issuance plus a listing of the company's stock in Hong Kong. This is an indicative timetable of an IPO process in Hong Kong. Usually it takes about 6 to 8 months. Given how busy the stock exchange has been, capped by the huge volume of listing applications over the past year or so, the process has become more protracted than it was before, but still the stock exchange has been quite efficient in terms of responding and getting back to listing applicants and also us as counsel and the other professional parties working on these projects. So the process is relatively predictable time-wise. This slide shows some of the key participants in a typical Hong Kong IPO. As you can see that the issuer is supported by various professional parties in this process. Especially you see that sponsors slash underwriters, meaning the investment bankers, helping the companies go through the process of vetting by the stock exchange and also attracting potential investors in the IPO process are going to be a very important player in this process. And typically, I would encourage interested IPO applicants in Hong Kong to seek out experienced sponsors or underwriters early in the process, way before you start the IPO process, just to consider what's the best time frame or the window for kicking off the IPO process, and also to time your operational strategies of your company around that, because most of the times the investors through the underwriters would tell the companies that there are observations or expectations as to what milestones you want to hit when you actually hit the road in the IPO process. So you want to be, synchronize the IPO process and the operational process. as counsel to companies, we typically advise you throughout the entire process. As I mentioned earlier, we also help companies raise private financing rounds. So many times our clients appreciate the fact that we can provide IPO-related advice even before you prepare to kick off the IPO, because many times the pre-IPO investors will ask about questions in relation to IPO. So it's always nice to have counsel on your side who can advise you on IPO-related issues when doing the private round financings. And we also have auditors who will be obviously very important for financial reporting. Some general requirements for listing in Hong Kong. Generally speaking, the Hong Kong listing regime is fairly predictable. You would generally follow the listing rules and various guidance letters to make your case as to whether the company is suitable for listing in Hong Kong. There is some level of discretion at the stock exchange or the SFC, the Securities and Futures Commission, which means that at borderline cases, sometimes the regulators or the stock exchange will make the final say as to whether a particular listing applicant is suitable for listing. But generally speaking, it is unlike the listing process in some other jurisdictions. Hong Kong is fairly predictable, and given strong legal and financial advice, you'll be able to tell whether you are okay to go ahead, and the process should be fairly smooth. For general Hong Kong IPO listings, these are the financial requirements. In most cases, I think for the audience in today's event, I think these are not that relevant, because most biotech companies will not be able to meet these financial requirements, these ratios and thresholds. But that's okay, because I'll tell you in a little bit that the Hong Kong Stock Exchange has a special chapter for the for the biotech companies to get listed under. Some basic requirements. These are relevant to biotech companies, and I'll get back to these in a short while. But generally speaking, you will need to make sure that a biotech company, before its listing in Hong Kong, has had no change to its ownership or control in the most recent financial year. For biotech companies, the requirement is changed to no change to ownership and control for the most recent 12 months before the submission of A1 application. There needs to be substantially the same management in the 3 preceding financial years for Hong Kong IPOs. Generally, for biotech companies, the requirement is reduced to a 2-year same management requirement. The rest of the requirement, these are the other requirements on this list are generally consistent for biotech companies as well. As many of you probably know, Hong Kong introduced the Chapter 18A listing regime for biotech companies in 2018, April 2018. Along with Chapter 18A, the stock exchange also introduced 2 very important guidance letters. One is Guidance Letter 92-18, the other is Guidance Letter 107-20. The first guidance letter provides the suitability requirements for listing of biotech companies. The second guidance letter, 107-20, provides very detailed disclosure requirements for listing documents of a biotech company. Both guidance letters have been updated twice over the past 3 years, reflecting the stock exchange's thoughts and experience in accepting and reviewing listing applications over the past 3 years. Some basic suitability requirements for listing. This is summarized from Guidance Letter 92-18. The most important requirement probably would I would say, is the requirement for at least one core product beyond concept stage. For small molecule drugs or pharmaceuticals in the stock exchange's language, the core product needs to pass phase 1 clinical trials and has received no objection to commence phase 2 or later stage of the clinical development. For biologics, including biosimilars, the requirements are equivalent. We have done numerous deals where a listing applicant has a seamless or adaptive clinical trial design where the stages of the trial are not so clean cut. We have very good experience communicating with the stock exchange, helping them understand our clients' fairly novel design of their trials and getting approval or clearance for our clients to proceed with their IPO, even though the fact pattern does not necessarily fit into the requirements as listed here. The core product needs to be regulated by one or more competent authorities. So far, the stock exchange in Hong Kong has only recognized the US FDA, CFDA now, NMPA, and European Medicines Agency, EMA. Some of our clients have tried to persuade the stock exchange to accept other equivalent authorities, including those in Hong Kong, Japan, or South Korea, but so far the stock exchange has not budged. But they have given the flexibility where if we have a strong case for trial conducted in jurisdictions outside of US, China, or Europe, but we have a strong case to convince the stock exchange, we could still try, and the stock exchange has not ruled out the inclusion of other jurisdictions as a category. The last, I think the most important requirement around the core products is that we must have intellectual property rights, including license rights to core products before we could list a company based on the core products. Another very important requirement is that the listing applicant needs to have principally engaged in the R&D for developing its core products for 12 months before listing in Hong Kong. For companies that have already commercialized or have already gotten marketing approval for their core product, the stock exchange requires that the listing applicant to show or demonstrate that it continues to have R&D needs for the commercialized or marketed core products, either for additional indications or for launches or clinical development in other jurisdictions. Some of the panelists earlier today have mentioned licensing business model, which is obviously something that continues to be a hot topic among people who do transactions as well as doing IPOs in Hong Kong, because the stock exchange has obviously paid a lot of attention to this area. They have realized that this is a model commonly adopted by biotech companies elsewhere in the world, and China has been in the front seat in this business model or this trend as well for many years now. So generally speaking, for in-licensed or acquired core product, a listing applicant needs to have completed at least one regulated clinical trial. If that requirement is not met, we will need to convince the stock exchange that we have a very strong reason why the R&D work, the clinical trial was not necessary after the in-licensing is completed. The other related requirement is that after the in-licensing is completed, the listing applicant needs to have progressed the core product from one stage in its R&D process to the next stage. Generally speaking, in-licensing is still something that the stock exchange is very cautious about, and many times we need to communicate with the stock exchange on behalf of our client who does in-licensing and relies on in-licensing to provide their core products. Sometimes we also represent clients who are truly innovative China-based biotech companies who actually attract licensees from outside of China. And we, as you have probably heard before, we also work on licensing transactions, and generally we will advise pre-IPO biotech companies in China to be very mindful of what rights you could give in the licensing agreement with a big pharma or other biotech companies in the US or Europe, because that could impact your suitability for listing in Hong Kong. And we want to be sure that the transaction is going to be advantageous for you as an endorsement instead of being a hindrance or block you from getting listed in Hong Kong. For medical devices that are recognized as core products in these listings, the requirements are slightly different. A core product that is a medical device needs to be categorized as a class 2 or above in China, again, China, US, or Europe. It must have completed at least one clinical trial on human subjects. And the trial needs to be a key part of the application for registration in the relevant jurisdiction. And the last requirement is that the competent authority, again, the NMPA, US FDA, or EMA, has endorsed or has not expressed objection for the company to proceed for this core product to the next clinical trials or for the company to commence sales of the product. Aside from the core products requirements, there are other requirements that need to be met before a company could be listed in Hong Kong, meaning financial requirements and investment-related requirements. One of the most important requirements that some of our clients consult us on is the meaningful investment requirement. Before a biotech company could be listed in Hong Kong, the company needs to have received meaningful third-party investment from at least one sophisticated investor, at least 6 months before listing. The definition of a sophisticated investor and the definition of a meaningful investment are subject to interpretation by the stock exchange, but the stock exchange has given detailed guidance for us to follow, and there are numerous precedents that we have worked on or can be observed from the market that could be very helpful when we need to make a determination whether a listing applicant or the company has met this requirement. Some other high-level requirements that I think the audience might be interested in hearing. For a 18A biotech issuer at listing, the market cap needs to be at least 1.5 billion Hong Kong dollars. The track record period requirement has been reduced from 3 years for general main board listings to 2 financial years for 18A biotech listings. Again, as I mentioned, the company needs to be under the same management of its operation for the last 2 financial years. This is also part of the track record period requirement. There are also working capital requirements and public float requirements that are more technical, which I'll probably skip for now. Due to the limitations of the time, I think I'll quickly flip to the last couple of slides. So again, as I mentioned briefly earlier in this presentation, the stock exchange has a lot of requirements around pre-IPO financings or investments. In particular, the investors who participated in pre-IPO rounds of investments need to be mindful of what special rights they could keep when the company approaches IPO. And as a counsel to our clients, we regularly advise our clients on these issues and make sure the investment agreements, including shareholders agreements, would not become a roadblock for the IPO process going forward. All right, that concludes my presentation today, and thank you very much for your attention. If you're interested in seeking additional advice, please feel free to reach out to MSQ or to us directly. Thank you. See you.
Thank you, Yiming, for your very insightful talk, and we learned a lot for the future development of biotech companies from a legal perspective, especially the cutting-edge Hong Kong IPO legal issue. And thank you. So, if any of you guys have any questions, please feel free to contact with Yiming